business credit card, 0% for the introductory period, which is between 6 up to 18 months. You can max out this 0% card, a $50,000 card, use that to start a business or scale a business, and it does not affect your personal credit profile. And so once I started seeing these limits on the business cards and my personal credit score only getting better as I was getting more business credit, it just absolutely blew my mind. So I started funding different investments, different businesses with business credit. Personal score stayed
Jack McCall, thanks for hanging with me today, man.
Awesome. Jeremy, thanks so much for having me. I'm super excited to be here. I'm here on this podcast to give all your listeners as much free value as I possibly can.
So I gotta ask first and foremost, man. So why are you the king of debt?
King of debt. So I show people the easiest and best way to finance businesses, which I think is through 0% interest business credit cards. It is the easiest by far and most effective to get access to between 50 and 200 grand of 0% interest capital. So I've been teaching thousands of entrepreneurs for the last several years.
So how did you get into this world yourself? Was it, something you were doing? You're like, man, this works really well. Or like, how did you kind of get in this whole world?
Yeah, so I've been an entrepreneur since I graduated university at University of Washington. I didn't learn anything about credit, nothing about tax, like all the important stuff you don't really learn in credit. And so I was an entrepreneur after I graduated. I was selling different products online. And at first, I self-financed my own business, which was very difficult. I had just a few $1,000s to my name. And that was just the only way I knew how to finance businesses. And then once I got to my second business, I learned about how to finance a business through an equity partner. So I did most of the work. They brought the money, and then it turned out to be a bad partner. We had to buy him out. It was a complete nightmare. That can work for financing businesses, but for me, it just didn't work. The third business, which was a travel company, we did a business loan, and we paid a high interest rate to get access to capital. That allowed us to buy more hotel rooms, which then allowed us to take market share from our competitor, and it led to a 6-figure acquisition. So that was really, really cool for us to see like how leveraging and borrowing money to scale our business led to something like an acquisition. But at the end of the day, we were paying a high interest rate.
Sure.
And so, I was 6 years into my journey as an entrepreneur, and I learned about business credit and specifically what it was, how to get it, how it's different than personal credit, how it's more important and more just beneficial and helpful as a business owner. And I'm like, wow, if I just learned about this, being an entrepreneur for 6 years, there's got to be millions of entrepreneurs in the United States that don't know about business credit. And really what blew my mind is business credit accounts, they don't report to your personal credit profile. So if you max out a personal credit card, it wrecks your score. But if you get a business credit card, 0% for the introductory period, which is between 6 up to 18 months, you can max out this 0% card, a $50,000 card, use that to start a business or scale a business, and it does not affect your personal credit profile. And so once I started seeing these limits on the business cards and my personal credit score only getting better as I was getting more business credit, it just absolutely blew my mind. So I started funding different investments, different businesses with business credit. Personal score stayed unaffected. And then I started teaching people, and I've been doing that for 3 years, and I'm teaching almost 3,000 people right now.
So that's wild. So you're looking at, business credit as detached from like personal credit. So I guess when we look at that then, number one, why do you think most people don't look at that? And number two, like, how would someone go about that?
Yeah, I think most people do not know about it. Most entrepreneurs are not taking advantage of this strategy because it's simply not taught ananywhere.
Well, because like I said, I've been doing this for 10 years, man. Like, and we have high balance business credit cards, but every single one of them runs my personal credit first. So it's like, this is different than what I've heard before.
Make sure you have enough comparable credit. So if you have higher limits on personal cards, you're going to get higher limits on the business cards. But when it comes to applying for personal cards, you don't want to apply for them too fast, or it's going to wreck your average age and it's going to make you look more risky to the lenders. So you want to be very strategic on the personal credit cards you're applying for, and only applying for cards at the top banks. These are tier 1 banks, which look better on your credit profile. You're getting points on these cards as well, but more importantly, you're getting higher limits. And so I only recommend people that I'm working with to apply for high limit personal credit cards, because once that account reports, it's going to increase their comparable credit. And so if you go get maybe like a store retail account at Sephora, Victoria's Secret, or those little retail cards, you're going to get tiny, tiny limits, and they're tier 4 accounts. So they look like crap on your credit profile. So it's getting personal credit cards at top banks, which look better on your profile, and building that comparable credit. And you can also build comparable credit through credit line increases. A lot of times you can just call the number on the back of the card if you've been active on that card and ask for a limit. And a lot of banks will give you a credit line increase without even a hard inquiry, which is great. So that's one thing you want to just figure out, your comparable credit. Ideally, you want to have at least 15K of collective personal credit on your personal profile before going to the business cards. And so that's really what you want to focus on. And the last thing to focus on there is the average age of your profile. And so if you're a little bit older, you might have better age on your profile. But if you're a little bit newer to credit or just a little bit younger in general, you might have young credit history. So you can check your score on Experian.com. It will show you your average age. You want to at least be above 2 years. Above 5 years is best. And if you're below those levels, you can get added as an authorized user on someone else's aged account, which will piggyback their history, add to your profile, and increase your average age. So those are the things you want to focus on optimizing your personal credit profile. And then it's figuring out what lending options you have available to you based on the state that your business is registered in. So if my business is registered in Washington, I can only go apply for banks that have a footprint that includes Washington. Florida is going to have different banks available to them. And some banks require a business checking account, like Chase, for example. You definitely want to have a business checking account open at Chase before applying for a business credit account there. So your personal credit profile, start building relationships with these lenders, which you can do through business checking accounts. And then just making sure you have a business name that doesn't sound too risky. Like Jack Real Estate Investing, that's a very risky name because they know you're real estate investing. But if you are a real estate investing consultant, you're going to get much, much more funding that way. And so you want to code your business through the NAICS code, which is on your bank account, to put yourself in a lower risk category. So even if you had a business that was half online, maybe half consulting online, half brick and mortar, if you coded it as the consulting portion of the business, you're going to be eligible for way, way more funding.
Wow. I feel like my face just kind of came off a little bit on that, man. We covered a lot of stuff very quickly. So one thing I thought was an interesting point is you mentioned, being in the state of Washington, you kind of want to work with banks that are in Washington. I'm in New York, so kind of a lot of times we have a lot more options open to us just being in New York. I'm curious, you mentioned big banks. For people out there, like, who would you consider to be big banks? Like who would you consider the right ones for people to be looking at?
Chase, American Express, US Bank, and Bank of America. Chase is giving out the highest limits by far. Very common when I'm helping people get credit. They're getting 50, 60, even up to 100K approvals just at one bank. So you can get that much from one bank. You go to US Bank, get hopefully another 25, 50K. Bank of America, hit them, American Express, et cetera. So that's how you stack up, up to $250,000, 0%, and that's 0% for 1 to 2 years. And when I started in credit, when I got my first business credit card, which is about 3.5 years ago, my first limit was $5,000, very small. But I was able to then reverse engineer and optimize my profile. And I was very fortunate, and I built relationships with these individuals called business relationship managers at these top banks. And these are individuals that are the bridge between the consumers, like all of us, on this podcast right now, and the underwriting team. And so the underwriting team, they make the decisions. And so I was able to get information from these business relationship managers and reverse engineer what the underwriters were looking for. So then I was able to just really optimize, every part of the credit profile, like I was mentioning, making sure the name of the business is good, making sure you have a business address, a phone number, making sure you're setting the bank accounts up correctly, and understanding which banks you want accounts at and which it doesn't really matter. And so that's one main reason why I was able to do so well in credit. And basically, I went from 0 business cards to getting approved for $500,000 in business credit in just over 1 year.
Wow.
And I was only able to do that because of this information I was able to get from these high-level individuals at these banks. And then I started teaching people, and I was really seeing, what was working, what wasn't working. And yeah, again, like I'm now teaching about 3,000 people, and I've crafted this perfect blueprint that works every time if you follow it.
I'm curious because I know, like, something I've done, this is a number of years ago, and we did this with personal cards, is like, say, for example, Chase has like 5 cards that like, I get a 30,000 balance on one, a 20,000 balance on another, 10,000 balance on another. They're all at 0%. And then we combine the balance and then I make a big purchase and then I pay it off later at 0%. Are you teaching things like that as well with business cards, or is that not something people should be looking at?
Yeah, I know. I think it's a really good strategy. And some banks allow you to move limits between cards and some don't. So like
Yeah, I
US
know Bank of America got kind of funny with it, but Chase was like, yeah, go for it.
Yeah, Chase is very lenient. American Express is very lenient. Bank of America, you can do it. It's just you have to do it on a request basis. And US Bank, they don't even let you. So here's a good strategy on Chase. If you have a 0% card, say $50,000, 12 months, and then we fast forward 12 months, that 0% card expires. If you apply for another business 0% card at Chase, say it's only 10 grand, you can move that 50 grand from that first card with the expired 0% over to that new card. And now you have 60 grand of 0%, basically again, and you can keep rolling it over that way.
So how are you doing that? Just through a balance transfer, and then they're kind of giving you the full amount, or that sounds kind of interesting.
So you can only move the limit over if it's not a balance. So if that first 50K card was maxed out, you couldn't move it over.
So I see what you're saying. You're moving the usable credit over, not the balance on the card.
Exactly. And what you could do, like if that 50K first Chase card was maxed out, to get it paid down, what you can do is go get 50K at other banks, US Bank, Bank of America, a lot of smaller banks maybe available in your state. And then you can, what we call, liquidate the credit into cash. So essentially you can run that new 50K card from a different bank, run it through a merchant processor, which it's like paying an invoice. So you're turning that credit into cash, and then you can pay down that 50K Chase card in that example, and then move that 50K of available credit over to that new 10K Chase card. And now you have 60K 0% on that new Chase card.
That's wild, and it kind of sounds a little gray area. Are they cool with that, or how does that work?
Cool with what exactly? Moving limits?
Well, yeah, because it seems like you're kind of like you're gray area a little bit on that. Well, I ran the credit card, now I'm taking the cash, then I'm paying for something. Do you get what I'm saying? Like you're kind of pulling a fast one in some ways.
So it's on liquidating the credit.
Yeah.
So basically how liquidating the credit works is you have someone send you an invoice and you pay the invoice, and then the cash lands in your bank account. So that expense is, for example, a consulting expense. And then the money that comes in is considered as revenue. Tax reasons, it's a wash, but then you can use that money to pay off the card. In terms of moving the available credit on from card to card, very easy and very doable.
So let me ask you this then. You've been doing this for a long time. You work with a lot of people. I guess where do you see people that are doing a really great job, and then what do you see people really messing up at?
So in terms of credit,
in terms of what you're teaching here.
Yeah, I think when people are following my blueprint to a T, they see success almost every single time. If you go to my Instagram page, King of Debt, go to results, you can see crazy amount of results. Where people make mistakes is if they skip steps. If they're not crossing their T's, not dotting their I's, for example, not making sure all utilization is low enough, applying with too many hard inquiries, applying for personal cards, not at the top banks, not the high limit cards, etc. Another mistake I see a lot of people make is the way they're applying for these cards. And so you can either do it on the phone, do it in the branch, or do it through a business relationship manager. Like I mentioned before, these are high-level individuals that work with the underwriting teams. So when you can apply through a business relationship manager, your application actually goes to humans on the underwriting team, not just a computer algorithm.
Yeah.
And so one thing I do with my mentorship program, I'll introduce the people that I work with my relationship managers, so they have that connection, they have that relationship, so they can apply through that individual. Any average person can go complete an application online, but that's just a computer algorithm, and that's why most people get the average limits, maybe 5K, 20, 25K. But I'm in the business of helping people get these 50K, 60K, and higher approvals per bank.
So I guess in terms of once you have this credit, like as business credit, like what good, kind of rules of thumb should we be using to manage it properly as well? Because at the same time you can get it, it's at 0%, you're operating for a while, but what should you be considering to kind of maintain it?
So one thing where some people can make the mistake on is not setting up their auto pay. Just because it's 0% for 1 to 2 years, you still have to pay 1% of the balance. So it's not interest, it's just of the balance, but you have to pay the minimum every single month. So when you get a business card or any credit card, definitely set up the auto pay, because if you have a 50K Chase card, you're not paying the minimum. They're going to take that 0% away, and they might even then report that account on your personal credit. Big mistake. So always set up auto pay. In terms of the timeline, you want to be very aware of the 0% period. Some cards on the shorter end are only 0% for 6 months. Some are 9, most are 12. And then on the high end, there's cards 0% for 18 months.
Mm-hmm.
So just making sure you're using the money in investing it or spending it into things that will make you a return where you can then pay off the card before you owe any interest, right? If you're going to using the money for a 5-year investment and you're getting the money back in 5 years, it might not be the best on a 0% card. But if you're in real estate, doing real estate fix and flips, where you can flip a house and get the cash back in 4 to 5 months or less, it's a perfect model. I teach so many people that get credit, use the money for real estate flips, or even for people that use the credit, the money from the credit cards as a down payment on a house. They do renovations on it, force the value up, do a cash out refi, they get the cash back, and then they pay off the card. So just to understand those 0% introductory periods,
Mm-hmm.
and understand that after them, the interest does go up to 20, 25%. So you just want to keep that in mind and making sure you can pay it off in time.
I'm curious, like when you're applying, I've heard, and this could be untrue, that I've heard that like when you're looking at hard pulls in your credit, that you may want to center them, together when a certain period of time, whatever it is, to kind of prevent multiple pulls. But I'd be curious from your perspective, is that true, or how does that work?
Yeah, so some banks you can apply for multiple cards in the same day, and they'll only give you one hard pull.
Mm-hmm.
And some banks, if you already have a card with them, like American Express, they might not even pull you in the first place.
Mm-hmm.
And then kind of on this topic as well, some banks are more lenient on hard inquiries than other banks. So American Express is one of those banks. They're a little bit more lenient, or if you have a few in the last 6 months, that's okay. And so I recommend to put a bank like Chase, for example, first in the credit card stack, and then do American Express, for example, a little bit later, because Chase is a little bit more strict on the inquiries, and they're going to give out the highest limits.
So with all the time you've been doing this, I guess what changes have you seen to kind of how these, banks and these credit card companies operate, right? Because we've seen the economy change drastically, especially in the last year with Fed rates changing and everything else. I guess what have you seen change with kind of how, this credit card world operates?
So I have seen lenders get more strict on who they're lending credit to. I'm not seeing any difference in limits if you're following the steps and doing the right things. But for the people that are going into, a metaphor, going into battle without the right tools and weapons to succeed, they're the ones that are seeing the denials. So if you go in properly optimized, applying the right way, adding the right information, you will do very well. But it's now more important than ever, because it's the economy is less certain, and there's some banks that have failed recently, and so there's banks that are trying to mitigate the risk, and they're going to mitigate the risk by not lending to people who are less attractive. So if you're attractive, they want to lend to you. They're in the business of lending, so you just want to make sure that you make yourself attractive to these banks, and then it's quite easy to get lending from them.
I'm curious because you mentioned, that personal credit is really important to this whole process working. For people out there listening that, maybe they don't have good credit, what sort of advice would you give them, so maybe they can do something in the future, or things they should be kind of considering to get themselves straight, whatever it may be?
Yeah, so there's a lot of different credit repair companies that can dispute the negative items on your credit report. And through the Fair Credit Reporting Act, there are very easy ways to dispute the negatives and actually get them removed. And when you dispute a negative, the proof is on the bureaus and the creditors. And so if you submit these disputes and they don't provide the proof in very tight timeframes, by law they have to remove them. And so if you are someone with collections on your report or late payments, the first and foremost thing you should be doing is finding an expert in the space that can dispute those on your behalf. And if you have a collection, if the debt is already sold from the bank to a collection agency, in most cases, it actually doesn't help you to pay that collection off, because
Mhm.
it's already a collection. So in the scenario, you get something called a pay for delete. So if you're talking to the collection company, you're saying, hey, I'll pay this, but I need in writing that after I pay it, you're going to remove it. If you can get that pay for delete agreement on paper via document, that scenario would make sense for you to pay off that collection. But if they're not willing to give you that pay for delete document, it actually won't help you at all to pay that collection off.
So I guess somebody should just consider not paying it, or what would they do in that situation?
In that scenario, you want to dispute it. And so
Mm.
if anyone needs help on credit repair, feel free to
Mhm.
shoot me a DM on Instagram, King of Debt. I'll give you some resources and steer you in the right direction. But if you're in in that situation, basically the only thing to do is one, wait until it falls off, which I don't think is the good strategy. You want to find an expert to dispute them for you, get them cleared off your credit report so you can use your credit and sort of, building credit and use it to your advantage.
What things are you kind of watching the most right now? As kind of, things change and the economy grows or, gets worse depending on what we're seeing right now. But I guess what things are you kind of watching the most and you think, people applying for credit should consider the most?
Yeah, so I'm consistently looking for new banks that are offering these 0% interest business cards, and I'm monitoring the specific advice I'm giving people and to see what results it's producing. Sometimes things change in credit. Like, for example, Chase on credit line increases, they used to require a hard inquiry on a credit line increase, but now it's only a soft inquiry. So there's these little things that change, and if you see these changes, you can get a lot more credit and do a lot better. And so there's people that I'm working with that are now requesting these credit line increases at Chase, and they're getting access to more capital without the inquiry. Sometimes you want to adjust certain information on your credit profile, on the credit applications, and sometimes you want to be putting them in different orders depending on what bureau each bank is going to pull from, which is another thing to note. Each bank will pull from a different bureau based on the location you live in the country. So if I'm in California, Chase might pull from Experian. If I'm in Washington State, they might pull from TransUnion. And so when you go and get ready for these applications, you want to have a good idea of which bureau the bank is going to pull from. Because maybe your Experian score is much higher than your TransUnion score. So it might be more beneficial to you to go find the banks that will pull from Experian and get the capital there first while you continue to optimize TransUnion. And so those credit pulls will change over time. So that's definitely one thing I'm monitoring to see what banks are pulling from what bureaus based on the state.
What advice do you give people in terms of like the best tools to use to monitor your credit? Because I've heard in some places that Credit Karma is terrible. I've heard other people say it's great. I've heard you sign up for Experian service. What things should people be using to really monitor their credit?
Yeah, so there's really three tools that I would recommend. Two are free and one is paid. And there's a good use for each of the three. So Credit Karma is a free monitoring service that shows you the scores for Equifax and TransUnion. It shows your Vantage score, which is a slightly inflated score, but it's still beneficial because it updates every single day. And you can see things like your payment history, your utilization, hard inquiries, average age, things like that. So for daily updates, it's very beneficial just to monitor. The app that checks Experian on a daily basis is just Experian.com. You can get a free account on Experian.com and it just shows you Experian. They also have a paid where you can see all three, but my favorite paid account that shows all three for your FICO reports is myscoreiq.com. So
Mhm.
this shows you your FICO score on all three bureaus once a month. And it's important to check your FICO score before applying for credit because that's the report that the banks are going to be looking at. And so anytime I'm about to apply for a credit card or any credit application, I'm always looking at my credit first because I know when I click submit, they're going to look at that exact report. So at minimum, if you guys are looking for free options, Credit Karma is a good free option and Experian.com. The combo of both gives you the ability to look at updates on all three bureaus.
I'm curious because Jack, you just seem like you're so on top of this stuff. And I know a lot of it's from working with students, a lot of it's from doing it yourself. But at the same time, like, what information are you consuming or kind of what are you following to stay on top of your game?
The most content I'm consuming in terms of credit right now is
Yeah.
just the results that my students are seeing. monitoring the advice that I'm giving them. And over time, things will change slightly, but really understanding the results that are coming in to see if what I'm teaching is working perfectly or there's something that I need to adjust. And so I do weekly coaching calls with my mentorship students, and I hear the feedback of what's going on. But in terms of like where I'm learning the stuff from, it's mainly through business relationship managers and the results that I see firsthand on the front lines.
For people listening, if they want to connect with you, if they're interested in maybe joining your program, man, where's going to be the best place for the people listening to do that?
Yeah, so my Instagram is King of Debt. Check my profile out. I have a link in my bio where you can book a call with my team to see if you'd be a great fit for you. We'll also include a link down in the show notes, Jeremy, if that's cool. And
Yeah.
basically, it's to a case study. It's a 10-minute case study where I go into much greater detail to show you guys on how exactly I went from zero business credit to getting approved for $500,000 in just over 1 year. So I'm giving specific examples, showing you guys step by step on how I did it. So if you guys want to check that out, click the link below. It's an awesome free case study.
So Jack McCall, King of Debt, thank you so much for hanging out with me today, man.
Awesome, Jeremy. Really appreciate it.